How are we doing? How's everybody? London calling. Frankfurt calling. Morning, Amy. Morning, Peter. Morning, Momo, Ian, Robert, John. Hi, John. Morning, Virginia, Andres, Thought Feeder, Baggy, Dion, AZ. Great. How are we doing? Sarah, Day Trader. God, there's a lot of people in here today. David, Zhao. This one does get so much busier, the London Frankfurt session, because you've got people that are really staying up late in America, and then obviously us lot waking up in the UK. So weird. Morning, XR, Evans. Can't say that one. Eunice, I'll call you, from Italy. Welcome aboard. Morning, Antoine. Morning, Serge. Right, let's crack on. Morning, everybody else. It's 11:50 p.m. there. Nice. Peter, $210 yesterday on the Dow, on the SIHEA, my first use of it. Good job. Best $99 I've ever spent. Probably spend better. But yeah, not bad. Peru, almost 2 a.m. Go to bed. You can't trade when you're tired. Morning, Keith. Right, quickly, let's look at the news. So big day today, obviously, it's unemployment claims today. Unemployment rate today for the US and Canada. So we've got big news at 1:30. We've got the Swiss currency reserves coming out at the open. I don't think this is going to make an impact on the DAX this morning. I'm not 100%. It's one of those news events I've never really paid much attention to, and I can't actually remember what it does much. But we'll find out in 6 minutes. So it's happening at the open of the DAX. And obviously the DAX is priced in the euros, and the Swiss news affects the euro. So we may well get some, hopefully we'll get a whacking great spike out and be brilliant. Done. But we'll see. So that's 8 o'clock. So all unemployment figures this afternoon at 1:30 for Canada and the US, and then we got Waller speaking at 5. So yeah, big day today. 1:30. I was contemplating streaming it at 1:30, but I'll probably do the open, or maybe I will. I don't know. I'll update in Telegram what I'm going to do today. I might come on at 1:20 and do an early session today. Other news overnight, we've had Fed talking about holding interest rates if the labour market continues to cool. We'll see what happens with that. So basically, if unemployment goes up, they will definitely need to hold the rates, because higher interest rates cause higher unemployment. Unemployment is already turning up. So the fundamentals, as you can see for the US, unemployment is sitting at 3.8. It went up by 0.3 last time. Today, if it goes up again, they will really struggle to get above a 5.5, because if they put that up, that will accelerate that. That ain't good. So it's meaning if we get a positive figure today, so if the unemployment rate today goes up, they're forecasting it to come down. If it doesn't come down, i.e. it stays at 3.8, or it comes out at 3.9, for example, that US dollar is going to drop quite hard. If we get the 3.7, unsure. If we get a 3.6, might get a pop. So it's a very important day today for the US dollar. We're waiting for that pullback to start on the US dollar and give it a little bit of weakness, and we need some news to kick that in. So today's a biggie. So other news overnight, that's to do with the Fed again. Market odds in November and December don't look out of line. So just saying that, freezing rates is probably going to happen, but we don't know. We had Suzuki talking again overnight about the FX moves. There are many factors which determine whether FX moves are excessive. So the yen, as we know, intervention is holding, but it hasn't had the desired effect, rallying the yen, which is what the Japanese wanted. So what he's basically saying is, again, don't push us, we will push you back. So he's basically just letting the market know that we're still watching this closely. You haven't done what we asked you to do. So a positive or a bigger than expected unemployment rate today will drop that US dollar, which will drop obviously the US dollar yen, which will please the Japanese. And if we get money flowing out of the US, it will quite possibly run into that yen and we'll get that second move coming. So so that was overnight. So it's good to see that they've still got their eye on the ball and they're not happy with the result of what they did. Although they didn't do anything in inverted commas. But Russia's lifted diesel exports. That's about it. So that's your overnight news. 3 minutes to the open. So DAX today, we had a very sideways day on the DAX yesterday. It was a very, very difficult session. So yesterday with the EA, I got a short. It was basically a 1R. I took a 1R on it. Took a break even on the second, or just small profit on the second. And then we did that all day. If you wanted the definition of a rotation day, if you go onto the website and look at the opening range breakout EA, the stock index hedge EA, I haven't actually done much for that. I've got to do a video and everything on it. But if you look at, not that one, strategies. If you go and look at the opening range breakout strategy page, there's a definition on here of a trend day, parabolic trend day, and a rotation day. Yeah. So what we had yesterday is pretty much the perfect example of a rotation day. So this is basically a day where the market has either no news or no reason to start or continue a move, basically. So there's equilibrium or balance between buyers and sellers. So in a rotation day, you literally just go sideways because there's no reason for the banks and institutions to move anywhere else. These are incredibly hard days to trade because obviously if you're trading any kind of trend breakout momentum strategy, you don't have it. What you do have is a range-bound strategy, which is perfect to trade, but you don't identify the range-bound strategy. Maybe when you get to there, you might think, oh, this looks like it's going range-bound, and then you might get that one. Yeah, but this was a really, really nice range. I said this yesterday, didn't I? I said, watch this area when we get back down there. And it did exactly that. I had a 50-50 shot getting it right, didn't I? So, but anyway, that was what happened yesterday. So today we are absolutely nowhere. There's your open. Pre-market range, too tight today. So the pre-market range is only 161 or 16 points. The minimum I'm interested in is 10% of ADR, which is 205. So that's too tight to trade today, because when you have a very tight range under 10% of ADR, the probabilities of a whipsaw to get you hedged immediately are quite high. So I'll be watching the 5-minute opening range candle and taking a break of that today. Frozen, or is that me? It's me. Breakout Forex, frozen. Bear with me one sec. Right. So, so as you can see, little pop out the lows. So if you're taking the pre-market 15, which is there today, you're short. But not a lot of volume at the moment. And obviously that pre-market volume does give you an indication as to what the open's going to be like. Quite often when we get low pre-market volume, we get a slow open. When we get high pre-market volume, we get a big fast open. So, so as for targets today, obvious initial support resistance is going to be yesterday's high low. So those are the two areas we need to watch to start with. Previous day's high is just above. Previous day's low is all the way down there, but we are miles within ADR. So these levels that we've got to the upside here, yesterday's high and previous day's high, not even halfway to ADR. So there's an awful lot of upside. Downside, if we break that low, yesterday's low, which was also a support the previous day, we've got to break straight down to the previous day's low, which is close to ADR. So we're either going to get a bounce play there. If we break that, we're going to flush. So a short play would be probably preferential today because you've got to flush all the way down to ADR. Upside, you've got two areas where you're going to find resistance. But we'll see where we go. So waiting for the 5-minute candle to close. We've got 2 minutes left on that. And then we'll see how we get on with that one. Just catch up on the chat while we're waiting for things to move. Morning, Jules. People from New Zealand and Australia. Local time is 7:53. I know, it's good, isn't it? You're having dinner, getting drunk. We're waking up and having breakfast, getting drunk. Well, depends if you go to Witherspoons for breakfast. SIHEA, this is the Stock Index Hedge EA. So it's a variation of the opening range breakout strategy. It's basically designed to hedge the market. Morning, Phoenix. Morning, Stevie. Looking for more weakness in the Australian dollar. We'll have a look at that in a minute. The new EA is out. It's Christmas. The new EA is out, but it's not Christmas. It's only out for MT4, though. I've got to get the MT5 one sorted. Trying to look at that today. I really need to do a video on it as well, so I need to get that done. I've got a lot of stuff to do. Morning, all. How do you measure number of pips with indices? Same way as you do with everything else. No different. Morning, Daniel. Morning, Jules. Morning. Sober tonight. All right. Evening. It is only Thursday. No, it's not. It's. Oh, this is confusing. Are you in the future or are you in the past? Can't remember if Australia are time travelers or not. Should know. I spent many months there. Dinner time here too, Bradley. Okay. Right. 5-minute open. Candle is there, 30 seconds to go. So there's your 5-minute opening range. Looks pretty good size-wise. 25, perfect. So I'll be taking a 5-minute opening range break today. There we go. So there's 5-minute opening range. So taking a break of that range. See where we go. We'll have a look at the Swiss figures and see what they were like. Give me a sec. I've just got to adjust an order over here. Right. There's no break yet. We'll keep an eye on the DAX over here. So that Swiss news that we had this morning was just the currency reserves. Doesn't seem to have loaded. There you go. 678 billion. I don't give a forecast on it. So it's not really something that tends to affect it much. With news events which are orange, the reason they're orange is because they are either what's called a reactionary news event rather than a news event that sort of affects monetary policy, or they're a news event that has little impact on monetary policy. But you need to keep an eye on them because if they come out as miles away from what their forecasts were, that will still have an impact. So because they will have an impact on other things. So the construction PMIs, for example, are an orange news event, and that came out as a 40. If that had come out as a 32 or something ridiculous, they would have looked at that and gone, why? And investigated it further. And they would have found that there's another thing that's impacted that, which they've missed. And then you suddenly get a move happening. So you've got to keep an eye on them, but they don't tend to move the market much. It's only the red ones which really are the key fundamental drivers. Right, long on the DAX. So upside potential today. Yesterday's high is there, and then we've got the previous day's high, which is there. So I couldn't see the line. The line is there. It's inside that propulsion gap, which is why I couldn't see it. So yesterday's high and previous day's high will be targets. My target at 2 are on that range is just inside previous day's high. So I'll be watching for price action there for potential resistance, assuming we continue the break. Right. Yesterday closed out 1%, up 6 on the month so far. Nothing closed out today. I was considering closing New Zealand dollar, US dollar, because I woke up this morning and saw the Asian session. And as I woke up this morning, we just got a reversal alert. And I was like, oh, it's so close. But I decided not to because we've got the news this afternoon. So I'm going to let the New Zealand US run. It's either going to hit TP prior to 130, in which case, done. If we are still hovering around here at 130, what I will do is move TP up to the second propulsion gap, which is at last month's high, which is also last week's high, isn't it? Where are we? Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, that's Friday. So that's last week's high and last month's high. So I'll move target up to there because obviously if that US dollar comes out as a negative, we're going to get a spike. So we should be able to get 150 off of it. So that's the plan. And obviously I will also protect this with a break even. In fact, I'm going to protect this with a break even now anyway, because it's unlikely we're going to get a move down to ADR ahead of non-farm payroll. So I'm quite safe protecting that with a break even. It's going to need something to happen to actually move an ADR. So leaving that target at the propulsion to start with. So that's that low, that propulsion gap, and also that resistance. It's this area here. So we'll see. Other than that, nothing else to take profit on today at the moment. We've got the US dollar yen, obviously, which I'm holding, and I've been holding since the intervention move for 3 days now. So we are still making lower highs at the moment today and lower lows. So we are moving in the direction of the intervention, which is good, but not as fast as I would personally like, and obviously not as fast as the Japanese would like, because Suzuki came out last night and said we're still watching. So we'll see. I doubt there'll be another intervention move this week, but stranger things have happened. DAX, let's just have a quick look where we are. So 5-minute ORBs held on the DAX. There's a lot of volatility coming in. Looking around a lot. Blimey. This is a lot of limit orders triggering at the highs. Look, we got through them. That's fine. So we're off. Right. ADRs. Nothing to look at from ADRs today at all. Asian session's been very, very quiet today. Sideways. Bit of movement, but no direction. So nothing to report on the average daily ranges. There's nothing getting close either. We haven't had any overnight news in Asia. Nothing. There's nothing getting anywhere near ADRs today. The weeklies, there's a lot of weeklies. We've looked at these Wednesday. You know, they've been there all week, the weeklies. So we hit a lot of these weeklies on Tuesday this week. So the main biggest move this week is oil. So this pullback on oil on the 61.8 retracement that I was looking for, we're getting scary close to double bottoming this. Yeah, so we've broken the 71.9 retracement now. So this is no longer a pullback. This is a sell-off. So if it was going to be a pullback, we'd expect a bounce. This is not bouncing in any shape or form. This is screaming down. So there is a potential that this is actually a pullback on a larger move. Although I'm not convinced on that myself. Oh, God's sake, give me the thing. So we were approaching a 50% retracement on the rally. We have had a 38 pullback twice on this move. So I'd be surprised if this is a profit take move. This is more something fundamental going on. I'm surprised it's come this far because we've still got those production strangulation moves being put in place by the Saudis and the Russians. OPEC hasn't tried to release that. So as we've got strangulated supply and demand is stable, we should see prices rising. So I'm not quite sure why it's moving down quite so much. Saudis have said they're going to hold their production levels until 2024. So there's not going to be any more supply. If there's no more supply and demand is there, it should rise. So I'm just surprised it's come down this far. So we are at a 50% retracement on this leg, which is probably a good place to buy. But then I was looking at this as a good place to buy, and that is a good place to buy, and it hasn't worked. So tricky oil. I'm happy for this to continue to drop all the way back down to the bottom, personally, because that will weaken the Canadian dollar, which will hold the US dollar back. I'm short on those. So I'm happy with this dropping, but this is the area of balance we entered into for a month here. So we pushed up and then we entered into balance for 4 weeks and then we started that leg. So this area here, we found equilibrium of buyers and sellers. As we've been selling off so hard, anybody that bought out of that zone to drive the price higher will be looking to add into their positions. So this is probably a very good spot for a long-term buy if you want to hold up to $100 a barrel, which is the forecast now. So $100 a barrel, which is miles, absolutely miles. So yeah, looks good for buys somewhere in here. If it breaks this low, I would be concerned. So if you wanted to position trade this, you can scale in next time. I'd wait for an hourly reversal alert. Don't try and trade this on the 15-minute. Wait for a good bit of strength to come in. So wait for, the reversal alert on the hourly is literally going to be one candle anyway at the moment because it's going so sideways. But I would wait for an hourly reversal alert on it. So you know you've got the buyers on side. And then if you want to scale in, just look to sort of scale in half an ADR or so down to that 61.8 retracement, that double bottom or that high, that zone basically. If it breaks that, you're coming down to here. So then you've got the decision to make, do I want to hold down to the double bottom? But I have to say, if it gets down to there, there's something fundamentally wrong with oil. So you don't really want to be long on it because it shouldn't be down here. This has been one of those things that we looked at last year, and we got the forecast here. Where was it? I can't even see it on the chart now. July, June, May. Let's go back. There we are. We got the forecast here for $95 a barrel, which is here. Yeah, so that's where we were forecast to hit. And what we actually got was an accumulation for months and then a collapse, which was totally against the supply and demand at the time. Then we popped up, gapped up. Then we played that short, remember, to the gap fill. If you were in here, I don't know, talked to a load of people, first time in here. You won't know, obviously, because you weren't here. We played that gap fill short. And then we sat for months and waited for that move. And that move literally unfolded within 2 months. It was forecast to take a year. It happened in 2 months like that. If this comes all the way back down to this level, when we've got another forecast at $100 a barrel, which is $5 higher, $10, yeah, sorry, $5 higher than we thought previously, something's wrong, isn't it? So I can't, and the speed of this, you know, climbing up the stairs, falling down the elevator shaft, you'll hear me say it over and over again. That is exactly what a profit take move is like. You climb and climb and climb, and then the banks and institutions go, right, pull the plug. They take profit on the move. The rest of that speculative move that they've just profit taken on is gone. The remainder is the long-term plays by hedge funds, institutions, prop, all that sort of stuff, the corporate desks. And that's why you get 50% or 38, 58, 50 and 61.8 retracements is because they're only taking profit on a portion of the move because they're holding some of it long term. So it looks perfectly like a profit take move. It's just, I'm surprised it's come this far. Much deeper than expected. But then again, this market is weird at the moment. So yeah, looks like a lovely place to buy it. And if you're not sure, get in with a small position, scale in a couple of times. And if you break that level, I would jump ship. Up to you though, if you want to hold it. But if we get down to there, you're highly likely to get a bounce. But my question would be, why are we down there? Doesn't make economic sense, not fundamentals. It's odd. But anyway, so that's oil, massively extended. DAX breaks on the way. So we've got 3 resistance levels here that were previously sold from. You got a little one there as well behind there. But so this whole area here yesterday was selling pressure, which is exactly where we're hitting now. But you're going to find a lot more limit orders placed at yesterday's high because banks and institutions use daily levels. So that's where I would expect us to get a wick form. And then after that, we're looking at the previous day's high. There. So this whole area here is resistance, which is that propulsion move, those propulsion gaps there. So that's where we're headed. Where we're going to turn, I don't know. We'll see. Certainly rallying nicely at the moment. Right. ADR's done. RSIs. It's going to be a quick session today, which is good because I've got a lot of work to get on. I'll look at the RSIs in a sec. I'll catch up on the chat. If there's anything you want to look at in particular, let me know, and I will have a look. It's Friday in Melbourne, is it? It's weird. You're in the future. NFP night. See, for us, it's NFP day. Morning, EA. Eunice, I lost all my savings up to 10,000 euros. I want to start afresh with your bootcamp. Go for it. If you've lost all your savings, though, how are you going to trade? Have to ask the question. Morning, Kennelly. Morning, Jerry. And I thought I had big position on the pound odd. I know what you mean. I haven't got a big position on the pound odd. I've only got one. Not going anywhere. Hasn't gone anywhere for 3 days. It's always the way. You enter and it goes, meh. But then you've got the option to get out, haven't you, if you want to as well. Oh. Close. Very nearly closed out position. I didn't want to close out then. DAX. Nice big break there. That's the 15-minute range now broken. So we are off today. Is the new breakout strategy available for update? It's available on the website. Yeah. That's why I said, oh, mine is bigger. Yeah, okay, right. Bigger position, yeah. Right. RSIs. So not a lot to look at on the RSIs. So reason being, as you can see, using pound odd as a perfect example, we've got a lovely RSI extension. We entered and then we've gone sideways for 3 days. So all these RSIs basically that we had lit up into the 25.75 areas have all faded away and we're sitting sideways. So this is either going to be a push, accumulation and rally, or we are actually going to get the pullback. It's just taking forever to do. So we'll see what happens. But there's no RSIs to look at today. Nothing on the hourlies. 4 hourlies, we had quite a few lit up yesterday, but they've all faded away as well as the moves have either petered out or they've started to reverse. So the only things we've got at the moment to look at are the CAD Swiss. So I got out of the CAD Swiss on Wednesday. Nice move. That, sorry, that's 4 hour we're looking at, aren't we? Not hourly. So that is still just about extended. You're just about to get that turn off as well, if we get a little bit of movement up on that. So I've got one long on the CAD Swiss from the H1 RSI extension on that drop. I'm looking to target this propulsion gap back into that accumulation, basically, and then it can do whatever it wants from there. But oil obviously is still dropping. The fact that we've had I think it's a 4-day drop now, isn't it, on oil? Pretty much. More than that. 1, 2, 3, 4, 5, 6-day drop on oil would indicate that they're going to probably start to profit take that move at some point soon. So if we look at the CAD, obviously it's been dropping because oil's been dropping as well. So it's probably due a little bit of a pullback. However, today we've obviously got at 130 the unemployment rate for the Canadian and the US. If they both come out as higher than expected numbers, they are both going to drive each other down. So even though oil is looking like it's getting to the point where it's probably going to start a pullback, which will rally this, the news will trump everything. So if that news comes out and we've got higher unemployment rates, we're coming down. If we've got lower unemployment rates, we'll be up there. So it's a bit of a double-edged sword for me. I would absolutely love the unemployment rate for the Canadian to go down, popping the CAD, but I want the US one to go up, dropping the US dollar. So we'll see what happens. That's my perfect news this afternoon, but unlikely that will happen. Never does. Well, it does, but we'll see. So that one's extended on the 4 hour only just, but you've been very extended, and you've come out, obviously, as we know, from an embedded extended period for 2 weeks, which is what we were scaling into to get out of this week. Pound CAD, that one got out of on Wednesday as well. So same thing, we were waiting for that Canadian dollar. Pound's had a decent run of late. You're extended to the upside. Again, this is potentially, and I don't really understand why, but this is potentially turning into a downtrend at the minute. This drop was obviously a perfect storm of the UK not increasing their interest rates and oil screaming through the roof. So the pound got massively weak as the CAD got massively strong. And obviously, when you got a weak against a strong, you get a massive downtrend. So that's basically what that was. That undid basically the entire year's worth of movement, pretty much. Not all of it, but pretty much all of it, literally in 3 or 4 weeks. So we're pulling back at the moment. There's nothing from Bailey as to whether we're going to be doing increases on interest rates. We haven't had any clues out of CPI or unemployment at all to indicate whether or not there's going to be more interest rate rises on the pound. So it's very hard to tell whether or not we're going to get any more strength. I got a feeling we've got another 0.25% to 0.5% on the pound, which would indicate it might be bullish. The Canadian dollar, no idea. If you look at the CAD fundamentals, they are topped out at the moment at 5. They've frozen along with the US freezing at 5.5. So everybody's freezing rates at the moment, but that doesn't mean they're not going to need to put them up again, because this inflation figure has just risen again in the US and in Canada, putting more pressure on that. If this unemployment, which is massively high in Canada, comes out as going up today, they can't do that, which will dump it. If it comes down today, it gives them the opportunity to put another 0.25% on that to get back on top of inflation, and everything then for the CAD will probably start to rally. So it's a very key figure today. So this could go absolutely either way today. It's really going to hinge on that unemployment figure. So the pound is being pushed around by the CAD at the minute a little bit. So good looking short opportunity for a trend continuation. You've also got a big, strong push up there, which they'll probably want to profit take. So if you look at this on the hourly, you've got this big propulsion gap we put in there. You've got this propulsion move out of that break as well. So that's what I would look to test. So if you get short on this, that's where I would look to get out. 125 to 150 ADR in that propulsion gap on the hourly. Can't I use a mouse today? And New Zealand dollar CAD. So this one, 4 hour RSI extension as well. Nice orderly move up on this one. So nice extension. It's absolutely perfect market structure. Looking for a push back down again before another leg up. But again, Canadian dollar. This is all Canadian dollar. Yeah. So everything you're seeing here that's extended if you get into it today, you are flipping a coin as to whether or not you're going to be in drawdown or in profit this afternoon, because the Canadian dollar is going to move. So any of these that you take, if you take this short, if you take this short, and if you take that long, you are relying on the Canadian dollar doing one of two things. So just bear that in mind when you're getting in ahead of large news events like this. That's it. All we got today. Nothing much else. TP hit on the DAX. So lovely break today, straight up, straight into TP to our banked. And as I said, to the pip. God, I love it when I'm right. That is where we found the limit orders. So the limit orders were not sitting at yesterday's high. They were sitting at previous. So bank orders triggered at the yesterday's high, which is that dotted line there. And we're pushing back. So we'll see if we've got enough momentum from the buyers to run these limits over. And if these limits get run over, those will puke. We'll get a pop out the top. And if we do get that pop, DAX, we will be visiting anywhere, really. That's the obvious area. But that propulsion gap, so we had that support break. So that propulsion move there is where the sellers entered this short move. If they're still short from up here, that's where they'll be adding to their positions. So that propulsion gap at ADR, but keep an eye on 152.60 for potential resistance. We got to get through here yet, though. We haven't got through. So, you know, this could well just hold, and we're going to come back down and hold here, which is very, very likely because it's non-farm payroll day. Yeah, the market doesn't like putting lots and lots of money into a move on anything ahead of non-farm, because if you get a massive result that isn't expected, the US dollar will dramatically change direction. And if the US dollar dramatically changes direction, you need to pull money out of other currencies to place it into the US dollar to make that move happen, which means that the euro will probably devalue or value up. And you do not want to be buying stocks in the DAX, which are priced in euros, ahead of a move that could potentially weaken or strengthen the euro on the US move. So quite usual for us on non-farm payroll days to see rotation before the news event. But we'll see. So this is a perfect short if you're not long. If it's going to go into rotation, that's where you want to short it from, where the buyers and sellers are sitting, which is obviously at highs and lows. But we'll see. We're not in charge. They are. Is the new breakout strategy available for? Oh, sorry, I've answered that. Yes, it's on the website. It's not an update. It's to a totally different thing. It's a hedging strategy. It's not the same thing. Morning, Peter. It's only because I can't say your name, Gayaraki. Did I get it right? I have to call you Peter. Tony, morning. Have I missed some news? My spread on the DAX is jumping all over the place. It's been doing this all week. Your broker, I guess. If your spread is all over the place, talk to your broker, or rather dump your broker and get another one. If you want a recommended broker, it's on my website under the recommendations page. I use Forex, which are pretty damn stable for everything, to be honest. So I'll put a link in the chat. But Forex are good. It's a double-edged sword with Forex. And to be honest, I don't mind too much. The downside to them is I do tend to get intermittent connection problems. More so with their ECN accounts than their Prime accounts. The Prime accounts I don't seem to get anywhere near as much, but the ECNs I do. The good thing about them, for me personally, is I can put all my eggs in one basket with them because they have, as you can see here, virtually no spread on the indices. Very, very tight. I never get more than 1 pip spread or 1 point spread on the DAX. On the US indices, it's also hardly anything, even during the Frankfurt session. But in the US session, it's even tighter. So they've got really good spreads for scalping indexes. They've got very high leverage. I can get up to 500 leverage with them, which is great. Apart apart from that, there's nothing wrong with them. Commissions are good. Can't really fault them. Lots of account types to choose from. Just call me Peter. Gaiaraki is my last name, actually. All right, well, there you go then. Why did you not put your first name first? I don't know. Morning, Marco. Morning, Amar. Morning, It's Time. Morning, Harold. Limit orders triggering again on the DAX. This looks like it might be it, which is fine. I will take a 3.5 hour return if that does pop back down again. So the stock index hedge EA, it's got a completely different trailing stop mechanism, completely different measurement mechanism, completely different entry mechanism. It's completely different to the opening range breakout EA. The only similarity is we are trading the open. So yes, it is kind of very similar, but it's also completely different mechanically under the hood. So the way that this one works is you trail by R. So that is your range. That is 1R of the range. That is 2R of the range. So basically, as soon as I hit 2R of the range, I auto trail 1R. Yeah. So as it pushes up, it uses the range, initial range, as the trailer. There's a million ways to trail. I just found it much easier to do it like this, because it just locks in an R return rather than, you know, locking in that much or whatever. It locks in a minimum of 1R. When you get to 3R, you know you're locking in 2R. When you get to 4R, you know you're locking in 3R, or whatever you set it at. I mean, obviously it's configurable. You can set your trading stop at 1s, 2s, whatever you want, but just easier. Those limits are triggering. Looks like a good short if you want to take it. I'm done though because I'm banked. Same thing with IC markets, MT4 disconnecting. Yeah, it's only intermittent and it's not that often. It tends to be, I don't know what it is. It tends, well, I know what it is. It's high volume. So when you get high tick volume, that's when you tend to get the block. Yeah. So basically what it is the server's not able to pump out the data through the pipe. Yeah. So there's a million of us saying, give me the data, and it's going, I've only got capacity for 700,000. So you can't have it at the minute. And then all of a sudden you'll reconnect and you'll get it, and that's it. And it's just a one-time thing that happens, and it happens on large volumes. So news events, opens sometimes, things like that. There's not a lot you can do about it. But the Prime account on Robo Forex is what they call their premium trading conditions. I think they've just got more server bandwidth on the Prime accounts, and there's less people with them. So I don't have any disconnections on my Prime account, which is over there. Which is why I'm pointing over there, by the way. But no, Prime doesn't live over there. Prime is on that monitor. And this is an ECN. So ECN used to be the fastest connection method, and it still really is. But the Prime is kind of ECN on steroids, if you like. So I'd go with the Prime account. But it's livable. But I've had the same problem with there isn't a broker that doesn't do this. Yeah, don't get me wrong. Axie used to do it to me. DOW&X, not so much DOW&X, but they're a much, much smaller broker. But I had the same problem on IC markets. I had the same problem on Axie. Just part of life, really. But it isn't that bad. A Pro POS Robo Forex for position trading. Do you use the Pro or the ECN? Prime. Just to throw a spanner in the works, Amy. It doesn't matter what you choose. It doesn't matter what you choose. If you go onto the website, make your mind up about which one you want to use. Yeah. There's many different account types. You got the Pro, the ECN, and the Prime. There's very little in it. Yeah. On the ECN, you get more currency pairs, which you'll never use because they're the exotics and you just won't use them. The Prime gives you the 28 core major and minor crosses, which is all you need. It gives you gold and it gives you all the indices. Yeah. So, but compare them. Yeah. Look, just get a screenshot of them, put them up side by side and look at them. Spreads floating from 1.3. Spread floating from 0. Yeah, much better trading conditions, especially for scalping. Look at the ECN. Floating from 0. Yeah, ECN and Prime, there's very little in it. Very little. So just choose whichever you know, it really don't matter. Use both. Split your money. Morning, Johnny. I'm an IC market, so I like to trade on C Trader, so my options are limited. Never use C Trader. You know, there are 2 countries in the world where the last name stands before the first, Japan and Hungary. I'm coming from the latter. I did not know that. My name's Lee. So when I go to places like Japan and China, my name's quite common. So is my wife's, actually. She's also got a name that's Chinese, Japanese. So it's 5-minute range breakout. What? Do you mean, yeah, so this is basically the opening range breakout strategy is on the website. There. Tells you all about how to trade the open. So DAX pulled back from those highs. So yeah, probably today what you're going to see, maybe even push down into the lows. We might get a big wide session before the news. See what happens with that. Do you have a base set file for the SIH? It comes as default. Yeah, default. I'm trading this, exactly what you see here. This is what it comes set up as, but I play with it. There's a lot less settings to muck about with in it. Yeah, minimum and maximum range of ADR. It doesn't matter too much what you put in there. My back testing has actually shown that the reason I built this EA initially was to test range sizes to see what the optimums were. And it came out that 0.1 and 0.2 were the optimums. When I actually looked into the reason behind why that was the optimums, it was to do with ADR. Because if you take a range break above 20% of ADR, so let's say, for example, this pre-market range was like that. The problem is using a risk-reward strategy. So that, you know, if you're going to use any kind of, doesn't matter whether you use fixed pips or you use a percent of equity, the amount that you use will be based on that range's movement. The problem is you're going to find it very difficult to get a 2 or 3R if that is too big. So that's what I was initially testing. This is why I built this thing, to get statistical data out. What I actually found was that doesn't matter too much, because what you can do is if you wanted to use a 30% of ADR as the maximum range, you can still make money doing that. All you do is you move this down to 1R. So you take a 1R return, but the strike rate on that is much higher because you don't get hedged or whipsawed very often, but you will find it very easy to make a 1R, even if it moves about 0.6% of an ADR, 60% of an ADR. It spends 68% of its time within ADR. Yeah. So as long as you don't go too big on that, you'll be fine. If you go too small on that, if you go down to sort of a 0.3 or something, you could basically trade a range that's that big. the spread will get you triggered on the first part of it, and a tiny little move down and any kind of movement like that before a move, you're hedged immediately. This is why this is set to 0.1, 10% of the average daily range. I need the market that I'm trading to be big enough so that one candle doesn't go like that constantly and get me into both positions before it goes. But play with these settings. All the system parameter permutation tests I've done have shown that, again, it's all profitable. It's just you don't know which it's going to be. So as with the ORB, there's no right or wrong. There's just different. It's just a much more comfortable way to trade, because you get days like this where you go like half an hour, I'm done. Thank you very much. That's me. I can go now. I'm off, do something else all day because I'm done. 20 minutes. You get days where you hedge and you go, oh, well, all right. Well, when you've made up your mind, we'll wait and see where you go. And then we wait for it to get somewhere and we go, right, that looks like a good spot. Get out and wait for the pullback. So it just buys you the time. It's just a much more comfortable way to trade, but it hasn't got a better edge or a worse edge than the opening range breakout strategy, because the opening range breakout strategy is still reliant on runs to make you the money. The days where you don't get the runs, you get multiple stop outs. This, you don't get multiple stop outs. That's the difference. You just take one trade a day. ORB, you can trade 10 times a day. Yeah, that thing whips around in a range. Let's say, for example, that was what we were trading. So if you were trading that as the opening range breakout candle, you would have gone long, stopped out, short, stopped out, long, sat long, didn't get anywhere, gone. So you'd have had two stop outs there. So you'd gone negative 2R, and then you would have finally got that one, which would have been a plus whatever R you targeted. So with the opening range breakout strategy, you are chopped around a lot. Some days, other days you're exactly the same as this. So all it's done, this variation, is it removes the frustration that a lot of people felt with the opening range breakout strategy, is just getting chopped around for 3 days. And then you go, bang, oh my God, that was amazing. I got all that money back and more. But you went through 3 days of pain to get there. With this, you just take one trade and it either works or it doesn't. So it's just one hit strategy. But the beauty of it is, when you're trading across multiple instruments, I've made $1,300 there today, this morning on the DAX. So when I trade this afternoon, if that one runs and banks 1,300, that one hedges and hedges in 1,200 loss, for example. And this one, the range is not right and it just doesn't take a trade. Because I've made money there and there, I can just close that hedge and walk away. So because you're trading a portfolio, it just makes it much easier to make money. I'm trading 4 times a day. That's it. I can't take more than 4 trades a day because there's only 4 instruments I'm trading. They only open once. So it stops all the over trading that you do as a trader by going, I'm stopped out, I'm stopped out, I'm stopped out. Screw you, I'm doubling my lot size. Or right, that's it. I'm going to take this one. Oh, that stopped me out. I'm going to go again. And you suddenly find out you've lost 7% of your account within half an hour of the open because you got cross. Can't get cross with this. Just takes one trade. It either works or it doesn't. And if it doesn't, you get a second bite of the cherry because you can exit your hedge at a later stage in the day. Just nicer, isn't it? It's just a much nicer way to trade, more comfortable. But it won't suit everybody. You know, some people don't like it, which is fine. It's trading. Everybody's going to have a different comfort level, a different way they want to trade, a different thing they want to do. You know, some people are comfortable scalping a 1 minute time frame. I don't know anyone that's profitable with it. I've never done it. Well, I have done it and I hate it. Some people can't bear the daily because it's far too slow. Other people sit on the daily and go, well, I make 15% a year on my 100 grand on the daily. That's my pension. I'm more than happy with it. Everybody's different. You've got to try everything. Different strategies for different people. But yeah, to answer the question, Mumo, there is a base set file it comes with. Yeah, obviously it just comes as it is as a default, which works fine. But I haven't tested it over hideously long amounts of years. I'm putting together some variation set files. I need to do a blog post, basically. Same as I did with the ORB. I need to do a video. I need to do a blog post. I've got to prepare all of that. People were just hassling me because they wanted it, so I popped it out there. I haven't done any detailed work on it yet to publish anything, so it will come, but I just need time. My dad had problems with Axie. Pepperstone sometimes does it. Yeah, all brokers do that. So the disconnection it's just a volume thing. It all depends how many people are trading, and there's all sorts of things that go into it. And things like non-farm payroll, I mean, there is just so much data. There's not many retail brokers out there that do not struggle at non-farm. There's just too much volume going through. So, you're going to get disconnection issues. There's nothing you can do about it. Morning, Gordy. Do I go to the market and update? No, it's not an update, Wayne. It's something totally different thing. Baggy, morning, Lee. Bought the SIH yesterday. For some reason, it's not showing on my MT4 purchased. Don't know. That's one for MT4. Well, MQL5 support. If you go into your marketplace tab in the terminal while you're logged in, try that. Just Google that. Cannot see purchases MT4 marketplace. I've got a feeling there's something you can do to remove a file in your terminal or something. Read those. If not, you just contact MQL5 support. There's nothing I can do. I don't have anything to do with any of that. Onto the UEA, do you keep the magic numbers the same? Nope. Oh yeah, I don't change the magic numbers from day to day. No, yeah, they're all the same. I never touch them. Once it's set up, it's set up. Don't touch it. That's it. Magic number, unique on every instrument. Don't touch. Once you've set it up, don't touch it. Unless you want to touch it, you can play around with it, but don't change the magic numbers. As long as they're unique on every instrument, that's all it needs. ATR calculation on Euro US dollars is at least 2 decimals for yen pairs. The yen pairs is first 2. How about the indices? Huh? Don't understand what you mean, Evans. ADR is ADR. The average daily range of the instrument. Yeah. So 1905 on that. 1121 on that. NASDAQ, whatever it is, 2,400. It's just a measurement. However, I don't really understand what the question is, sorry. Any reason I don't trade the FTSE? Haven't got it. Don't get it with RoboForex. I have traded it. I traded it on Funder Pro. So there's a prop firm called Funder Pro, and I did a demo with them. I didn't buy a evaluation. I just did a demo to test them out, because I wanted to see what they were like. And they had the FTSE, so I traded the FTSE for a week, and it was shocking. But the DAX wasn't amazing that week either. So I haven't done any testing on it yet, but I probably will do some testing on it. I'll need another broker though, because Robo doesn't have it. So I might switch back to, well, not switch back. So I might put some money into Axie. I don't think I've got an active live account with Axie at the moment, because they turn everything off when you take your money out. No, I haven't got. Actually, don't have the FTSE either. It's weird. The FTSE doesn't get. Elliott wave, harmonics. Yeah, it's weird that not many brokers actually have the FTSE. I don't know why. It's just one of those things that's, I don't know, weird. It's very slow. I liken the FTSE is a little bit like the DAX. So the DAX and the FTSE, you obviously would trade together. The FTSE and the DAX are very much like the relationship between the NASDAQ and the S&P. So if you look at these two instruments, most of the time they do pretty much the same thing. They don't, but they do similar. So they're close. But this thing moves at a crazy rate of knots, 2,609 ADR. This thing moves at 589 ADR. It's a much slower thing because of the weighting of stocks. There's 500 stocks in the FTSE. There's 100 stocks in the NASDAQ. There's 40 stocks in the DAX. There's 100 stocks in the FTSE. So it's kind of the opposite relationship. The one with the more stocks happens to be the slower one. Yeah. So there's 100 there and 500 there. Therefore, that is slower. There's 100 there and 40 there. Therefore, that is slower. The FTSE, not that. The FTSE. So the slower markets I've always found are much harder to trade because you don't get that violent volatile open as much as you do with the lower stock indexes. They're more volatile. So I would liken probably that to that. So there's nothing wrong with trading it. It still does the same thing. I just haven't got a terminal. Probably turned off this terminal, but we'll see. They might still be feeding me data. I'll have a look. I'm pretty sure they're not. I think, Darwin X. Have I got it in Darwin X? Oh, yeah, there you go. Let's see. Let's see. Oh, wrong one. So if you put that next to the DAX, and there, so you can see them both. So the open on the FTSE was there. Yeah. So look at what the DAX has done. Boing at the open. And look at what the FTSE's done at the open. Choppy crap. That's what my experience was trading the FTSE. It does have days where it goes. Yeah. That's not obviously a day it went. That's pre-market movement starting up from post-market. But you can't see it because it's behind my head anyway. But yeah, so I just couldn't find the FTSE was as good at breaking out. Don't know. Try it, test it, come to your own conclusions. Try switching your MQL profile, Keith said, about the marketplace thing. Yeah, that might help. Or just log out of MQL5 marketplace in your MT4 terminal, close your MT4 terminal down, restart your MT4 terminal, then you won't have probably won't have a marketplace history. Then log into MQL5 again, have a look at your marketplace, see if it's there, close it down, turn it up, just turn it off and on again. That's all you can do. Shocking in a good way or a bad way? I don't know what I was talking about, Daniel, when I said shocking. Can I check Aussie CAD? Yeah. So Aussie CAD, we're up at resistance at the moment. So this is the previous week's high, last week's high, that area there. So big, strong resistance zone we're sitting at the moment, and we're hovering up there. Was extended. So couple of nice trades on this over the last week. So straight in, straight out, 2 trades. Didn't quite get extended on it yesterday. but it's just hovering at the moment. Obviously, this is going to move it this afternoon. So it looks like a good short at the moment. We've just had a reversal alert there. So that's a multi-day M pattern going in. Looking short, looking bearish. But obviously, the Canadian dollar will either come out with a positive news event or a negative news event this afternoon. So if you get into this now on that reversal alert, right now it's looking like market structure is shifting and the shorts are starting to take control. But this afternoon, that's all going to flip on its head. So anything you get into with a CAD, I mean, short wise, I'd be looking for that. Anything you get into with a CAD, you're at the will of the news this afternoon at 1:30, aren't you? So it looks good as a short. This is certainly an area they're holding at the moment, isn't it? So they sold it from there. Buyers tried to take control back. Sellers ran them over, ran all the stops, pushed down, made new lows. Market structure, very nice. Buyers rallied for 2 days, tried to get back. This was the Australian news. Straight back up into that zone. Sellers sold back off again. Sellers are just not letting them through that level at the moment. But if the fundamentals shift, those sellers will suddenly go, nope, we don't want to sell it anymore because the CAD is rallying on lower than expected unemployment figures, and they will all flip long and will pop out the highs. So anything you do with the CAD or the US, pretty much anything you do with any trade you take today, regardless of currency, it will all move, because when you get a fundamental news event like unemployment, interest rates, or inflation released, the key drivers of the markets, the market will factor in the next move on that and make a decision on whether they need to be long or short on that currency. If you need to take a load of extra positions on one currency, and it doesn't matter which currency it is, whether it's the euro, the dollar, the pound, whatever, you have to pull money out of the other currencies to put it into that currency. So if the US dollar has a massive hit or miss on unemployment this afternoon, they will want to either pile in or out of the US dollar. If they pile into it, they will need to remove money from the euro, the pound, the yen, and everything else to put it into the US dollar. If they want to pull it out of the US dollar, they've got to put that US dollar money somewhere, typically Swiss franc or yen. So you find every single currency this afternoon moves, regardless of whether it's to do with the US or the CAD, because there's a lot of volatility, changing direction across the entire portfolio. When you're trading a position trading or a portfolio approach like the banks do, yeah, they're looking at this as a whole, and they're looking at what's my exposure on these currencies. Okay, we've got a lot of US exposure short. If that unemployment figure comes out as a negative, they'll be going, okay, that doesn't look like the short exposure is correct. We need to get out of the short exposure and take that money and put it into the US dollar. So we close out that. We need to pull this out and pop that over there. So everything changes direction. That's how the markets work. There's two factors at play in every single instrument you trade in FX, base currency and cross currency. But everything will be Oscar Mike, as they call it, this afternoon. Stands for on the move, if you didn't know and you don't know any military stuff. I said that. Been playing a bit too much Call of Duty, obviously. Dev, Evan's question is very pertinent. He meant, I believe, whether you need to buy multiply by 100 by 100,000 or any other pairs pips. I don't know. I don't need to, do I? Because I have an indicator that just does it all for me. So I don't. You're asking maths questions. How do I calculate maths based to come to an equation? I don't know. Go and look it up, Dev. I'm not a maths tutor. The reason I built my products is so that it just shows me what I need to know on the screen. The mathematical calculations are all in these products. I can't remember exactly what all of them are, and I can't look them all up for you now, I'm afraid. So go and look them up. Where did you get the harmonic indicator? I've no idea. I think it was PZ. It's an old indicator. Oh, what was that on? What platform? Which one did I just launch? Jaxi, wasn't it? Don't go into harmonics, though, John. I'm not promoting system hopping here. I actually talk about not system hopping. This is by, yes, TZ Harmonics. It's a load of crap. It's a repainting hindsight indicator. Yeah. So it will go like, here you go. Here's an A, B, C, D Elliott wave pattern. Thanks for that. Could have told me that there, couldn't you? Pointless. Hey, look, I can draw what's happened in the past on your chart. Thanks. I can see that. Useless. It's great for showing you harmonics. If you want to know what a Gartley is and all that sort of stuff, brilliant. There's a Gartley. Beautiful. I know that. I can see it. I know all about them. What it's designed, what I was hoping it was going to do when I was looking into harmonics, however long ago it was I was looking into harmonics, I was hoping it was going to show me when things are setting up. And it does that beautifully. So with this one, for example, at that point there, it would have gone, hey, this is an ABC pattern. You need to sell. And I'd have gone, excellent, because we're going to complete an ABCD pattern, aren't we? And then what would happen is it would push up there and it would go, oh, sorry, you didn't see that. It's not there anymore. It would vanish. So it's a completely repainting indicator. No use. It is useful for saying there is a setup coming. But as I say many times in here, yeah, because it says there's an ABC pattern, there's probably going to be a D leg. What's the odds of the D leg forming? 50-50. How does it help me? It doesn't. It gives me a 50-50 shot at every single trade, which is fine if you want a risk reward based strategy. Harmonics is pretty good, but the failure rate in harmonics is much higher than 50%. So you do need to get a very good 2 to 3 hour return out of every trade you take. Otherwise, harmonics is hard. It's quite good, actually, harmonics. I would say the thing about harmonics is quite handy is for multi-time frame trading. So if you've got a harmonics pattern setting up, like you're going to set up a Gartley, that's where you would look at a short on it. So if you use the 4 hour Gartley about to form, you would think, okay, that's probably going to go down to there. So what I will do is I will try and trade the market structure on the way down on that leg. You will soon find out if the Gartley is going to fail by having the multiple stop outs. But if you catch that leg on the lower time frame, you can actually get multiple 2R trades on the way down. So you could make 6-7R on that leg. But it's that leg completing in a Gartley formation or an ABCD pattern formation that you're relying on. If it actually turns into going halfway, coming back, going into accumulation for 3 days, popping up a little bit and then coming down, that won't be there anymore because it will repaint and say, sorry, this isn't a valid pattern anymore. And you'll have only caught half the move. You know, this is the thing. Everything you see setting up is looking great until it doesn't look great anymore. The head and shoulders looked like it was working, but then it failed. If you take it from there, you're fine. But what happens a lot with head and shoulders is that. Because that is a new market structure formation long. You know, so everything's got a massive failure rate. Shame. You know, this is the thing. If it was that easy, everybody would be billionaires, wouldn't they? Not that easy at all, is it? US dollar yen, is it moving? Nope, still stuck. We are still lower highs and lower lows though. So this is exactly where the trend line junkies are selling. Look. So this is where the trend line junkies go, hey, 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 this is the sell point. This is the sell point. They start selling. Then the banks go, we don't care. Or they go, fine. 50-50 shot. One of those two things is going to happen. Guarantee it. Keith, through the website. I did an experiment on demo, MRA, EA, DAX, 1 minute, time frame, RSI filters, 60-40 basket trading. Very interesting results. The trouble with testing Mumo on the 1 minute time frame, I'm sure that result worked very well. However, you have to test it for a minimum of 3 years. Good luck with that on the 1 minute time frame. You know how slow the market reverse alerts EA is at back testing on the 5 minute chart? The 1 minute chart is like go away on holiday for a week, come back. You might have got a month or two's worth of data. It's that bad. It's very hard to backtest on the 1 minute chart over a long period of time because it is just so slow. It's unbelievably slow. Have I considered writing a book? No. I created a load of content for YouTube instead. My book is, yes, I have written a book, actually. It's called The Position Trading Bootcamp. The audio version is available here. Go and read it. Listen to it. Actually, I have written a book. Right? Every single video is transcribed on the website. So there is my book. And that's not the longest video. That's the shortest. I can't remember how long the videos are now. That's only an hour, that one. But yeah, I have written a book. It's on the website. Day 3. No, day 4. Day 4 is the big one. That's going to be a long book, isn't it? That's the strategy, the how to position trade one, isn't it? So, yeah. If anybody fancies a snooze, there's the material. A lot of it. Right. I think that's all I've got today. If you did write a book about position trading, it would be up there with Trading in the Zone. I don't think you can put me on the same pedestal as Mark Douglas. Not by a long shot. Mark Douglas was a guru. But yeah. Trouble with books is, and this is actually Tom Hugard said this the other day. Obviously, Tom's written a book. He's sold about 50,000 copies of his book, which is great. But the problem with writing a book is, and the problem with selling a course is, which is why I put it all up there on the website for free. As soon as it's out, it's copied. Yeah. Somebody sent Tom a message. He posted it in his group. I was reading through it the other day. So basically, he was talking about books to buy. Instead of buying trading courses, which is totally right, I totally agree with what he says. It's better spending $3,500 on a trading course, right? Go and buy these 10 books, he said. These 10 books are going to cost you $300 or £300. That course is going to cost you $3,500, and it's only one course, and it's nowhere as good as these 10 books because these 10 books are written by masters of trading. Yeah, some idiot, right? And he included his book in there. I think he put himself at number 4 or something. And some idiot messaged him on Telegram and said, "Hey, Tom, I saw you posting about those books. If you want, I can give you all the PDF copies of them for free. Oh, yours is in there as well." So he basically, some complete idiot, messaged the author of the book and told him he had a pirate copy of his book. And of course, Tom was probably not very happy about that, considering Tom donates all the money from his book to charity to help the homeless. So basically, this guy is taking money out of the homeless's mouth and putting it into his own. Choice words. But same with video courses, yeah? You want a video course on anything? I got it. I haven't got it, but someone's got it. Someone will say, I've got it. There's every course out there you can buy is pretty much available somewhere on the web, isn't it, for free? So you put together, and I did this with my very first version of the Position Trading Bootcamp I did. I tried to sell it. I joined that crowd. Do you know what I tried to sell it for? $99. My entire life's work. Because I didn't want to make money doing this. This isn't my job. I wanted to put it out there, but I wanted to get some money back for my time. 1 week after putting the course up there and having about 15 people get into the course, it was out on the web, free. So I thought, screw you. And no, it wasn't out on the web free, sorry. There was some idiot in Africa trying to sell it for $49. In my Telegram group, contacted everyone going, hey, do you want to buy his course? I've got it. It's only half the price. Somebody contacted me and said, you know, there's an idiot selling your stuff for half the price. They haven't even got $99 to buy it with. So I said, screw you, pirate. And I put it out there for free. He lost his income. Fantastic. It was the best thing I did. Screw the pirates. Anyway, same everything in it. So if I write a book, yeah, if I spend a year trying to get this all in paper, get it into a publisher, find a publisher that will publish it, get all the rewrites done the publisher's not happy with, go through all that pain, go through picking a cover, get it onto the shelves. The day after, it'll be in PDF for free and everyone will have it. And I won't earn a penny. What's the point? No point. So this is, I think this is the best way to get content out there. Chuck it out there. Let everybody have it. But you learn then, don't they? Pretty much the only strategy that really works. So it's definitely up there. Well, it's not a strategy that works. It's a methodology of how to trade, basically, isn't it? It's a bit like Mark Douglas's book. Trading in the Zones is one of the best books on trading. It's not about trading. Tom Hugard's book is not about trading. It's not about, this is what you do. When you find a candlestick that does this, this is how you do it. This is the strategy. Your risk reward goes here. This is what you need to do. These are the pitfalls. It's about how to trade. How to trade is not about any strategy, system, or candlestick pattern. It's about a methodology and a mentality towards something that is random that you cannot control. That's what Mark Douglas's book is about. It's about letting go of the control, because the only way you can trade is to accept the fact that I'm short on the US dollar yen at the moment and I have absolutely no bloody clue whether I'm going to make money or not. As soon as you accept that, you suddenly start to make money, because you realize that if I put this order in the market to guarantee my loss, I will guarantee my loss. Because I've told the market, when you get to that price, and it will, because it goes up and down all the time, I will lose money. And as soon as you put all these bits together, you suddenly go, that's how it works. It's nothing to do with strategy. Every strategy out there works. It's just got this order in it that stops it working. They all work because everything is trying to pick on a top and a bottom. And it will get the top and bottom right at some point. Yeah. Every trend breakout is trying to pick the breakout. It will get it right at some point. So all you've got to do is, when it gets it wrong, wait for it to get it right. And all of a sudden, that strategy that wasn't profitable is profitable. Simple. You can't get them with 1% risk, because if it goes wrong 5 times in a row, you're probably going to blow your account. So you just reduce all the pressure of risk down to, I couldn't give a monkeys, and everything suddenly becomes profitable, doesn't it? That's how it works. It's what the banks do. They don't go in with $100 million account and go, I'm going to risk 1% of this. Bank would turn around and go, you nuts? What if it goes wrong? We're going to lose 1%. It's $1 million. If that ticks down by half an ADR, you're telling me you're going to give $1 million of our bank funds away? Shut up. You're sacked. You sit in his seat. Nuts. But yet we're told to do it because we haven't got $1 million. Which is the catch-22, isn't it? You can't start a business without money. If you haven't got money, you can't be a trader, unfortunately. Zen and the Markets is awesome. Yeah, I've heard of that. I haven't read that one. I've read a lot. I've read all of Larry Williams' stuff. I've read all of... my God, he's just died. I've forgotten his name. I was going to say who it is in a minute. But I've read loads of books. And they're all great. Mark Douglas, yeah. So yeah, books are much better because you get information. But reading books doesn't make you a good trader either. Reading books makes you educated. Yeah, very clever people do very stupid things. It's the people that do stupid things twice who are the really stupid things. If you do something stupid and you learn from it and don't do it again, That makes you clever. If you do something stupid twice, you're stupid. But we put stops in the market forever. David Paul, yeah. David Paul sadly just died. He's very, very, very good. Very good educator. A load of his stuff on YouTube as well. If you want to. And again, he's all about price action. Teaching you about how the markets work, and psychology and price action basically together, which is all you need. It's funny, isn't it? All of the best educators in the world, yeah, the best traders in the world are he's a doctor, incredibly intelligent people, clever people, because stupid people put money into something that is a hope. Clever people do statistical analysis, find an edge, and will not put a penny into it until they've proven their theory in 1,000 different ways and it works. Those are the people that make it. Stupid people are chasing Lamborghinis and following people with big gold chains on their necks. Yeah. People with big gold chains on their necks are not clever, which is why they're not doctors and they're not making money in the markets. But unfortunately, they are the dominant force on YouTube. So we follow them. Well, I don't. Some people do. Right, I'm going to leave it there because I'm done for the morning on the DAX and there's not a lot else going on today. So 1:30 this afternoon. I think I will come on early today. I'm going to trade non-farm. Well, I'm not going to trade non-farm payroll, but I'm going to stream through non-farm payroll because these are very important news events today. If non-farm payroll, as I'm expecting, is a volatile one, and we got a lot of movement off of it, the US Open is going to be very, very hard to trade. So I will probably turn all the EAs off on the Open and I won't trade the Open today. Because if the market has done all of its movement before the Open, i.e. we've got 150% ADRs on the indices and the US dollar, it's not going to have anything left. So the Open will probably be like that. It might go mental, but again, testing has shown big news days are the worst days for trading opening ranges. So I'll probably give it a miss this afternoon. But if the news comes out and we get very little market movement, which could happen, but if it does happen like that, I will probably trade the Open at 2:30 as usual. So we'll see what happens, but I'm expecting big moves today. Just because we've had some big numbers coming in. So we've had a big unemployment number coming in there, which is not just a miss, it's a catastrophic miss. So the unemployment claims were pretty much as expected. So I'm hoping we get a change in unemployment today, but we'll see. So yeah, I'll be back at 1:20 this afternoon. I'll put a post out in Telegram. I'll change the stream this afternoon to be scheduled for 1:20. Trade non-farm payroll. Yeah, and then see where we go from there, really. Read a book on golf and you are set. Yeah. Books are good fundamentals, but nothing beats screen time. Yeah, exactly. It's repetition, basically. Like I've said in here before, I open charts up and I see things people don't see because I've seen them 1,000 times, because these things are burnt into my retinas. I open a chart up and I immediately look at it and I can see, it's like a little bit like The Matrix. Have you ever seen that film? Oh my God, what's it done? He takes this pill. It's not Ryan Reynolds. Can't remember who it is in it, but he takes this pill and it makes him hyper intelligent. Limitless, I think it's called. That's it. Flav's just got it. That's kind of what I see when I look at the charts, but not because I'm clever or because of any other reason than I've spent 15 years staring at these. So I open up a chart and I can see Gartleys, I can see head and shoulders everywhere, I can see price action, I can see market structure, I can see 38% pullbacks on that at the moment. I can see this all because I've just seen it so much. And it was drummed into me by one of my mentors. He said, you are not going to get anywhere until you spent 10,000 hours staring at these things. And I said to him, how the hell do you spend 10,000 hours on charts? If you add that up, I'll be dead by the time I've done that. He said, just open the strategy tester, press the start button and watch. Watch months fly past in minutes. Believe it or not, you will see the same thing happening over and over and over again. You'll see support resistance bounces. You'll see head and shoulder patterns. You'll see market structure playing out. You'll even be able to tell where the moving averages are on the chart after a while because you don't need them. You can see it all because your eyeballs see the same thing again and your brain stores that information and it goes, every time this happens, this happens. Every time this happens, this happens. And you'll see it and you'll go, that made a new lower high. I should be expecting a lower low because I've seen it happen 1,000 times. But you can't do that unless you do it. So you can read a book on market structure and go, I know everything about market structure. Open up a chart and go, okay. So that goes down to there. That was lower than that. Takes you that long because you may know what you're looking for, but you won't see it until it's seen 1,000 times. It's such a critical part, which is why I've always been an advocate of getting in the strategy tester, hitting that button and just watch this thing fly past. You will see it. If you want confidence that support and resistance works, yeah, watch support and resistance play out over and over and over again on the chart. Maybe not that fast, and you probably need to zoom out a little bit. See the structures, yeah? Why did that bounce there? Why? It's obvious. What's going to happen when you get here? Moved. What's going to happen when you get there? Oh, weird. Limit orders triggered. Did it hold? No. Fine. But what happened there? Ran out of pace. Yeah. That big push through. You either get at support and resistance, you get one or two things happening, a bounce or a propulsion gap. Yeah? What are propulsion gaps? Accumulation breaks. What happens at support and resistance? You break it or you don't. See it over and over and over again, just unfolding in front of your eyes, basically. This is a little bit zoomed out. But the best time frame really to, I think, and what I did, he told me to do this on the 4-hour chart. Because the 4-hour chart is much more structured than the other time frames. There's a lot less of that crap going on. The 4-hour chart is much smoother, or the hourly chart. But on an hourly chart, you can sit there and you can watch like months go past, absolute months go past. You spend an hour looking at it, you'll see years of price action. And you'll be like, does just go up or down, doesn't it? How far does it go? And then all of a sudden you'll be doing things like this. Okay, so in that year, it only moved that far. Okay, so, and then you'll suddenly think, well, so if I shorted it there and I just went like that, it's definitely going to do that because that's what it does. And it gives you the confidence in everything you do because you've seen it 1,000 times. But until you've seen it 1,000 times, the book you've just read that tells you all of this stuff is just theory. You have to experience it, but we haven't got 1,000 hours of our life to put into it, have we? This is absolutely critical. Yeah. You know, this is the thing. You know, like I just said, I see 38 retracements. I told you that's a 30. You just know it because you see it all the time. It's just weird. It's nice. It's weird, and it also gets rid of all of that confusion. Everything you see that you on your chart, and you go, that's telling me to go long. That's telling me to go short. You don't have that because you know what it's going to do with all likelihood. And if it isn't going to do that, you know what it's going to do next. There's only two things it can do, isn't there? It can go up and it can go down, or it goes sideways through time and just sits in a range. So if it's going to go up, it's going to go there. If it's going to go down, it's going to go there. So if I go short and it doesn't work out, I can go short again there and it's probably going to bounce. Why? Because that's what it does. We know it does that. I've got an indicator on my chart that shows me it does that. Yeah? All the time. Which is why this paints historical information. You can see it. It's happened over and over and over and over again. All the time. But do the strategy tester thing. It speeds up your development. So much. And like Phoenix said, I was at the driving range this weekend. You can read a book on how to hold a club perfectly and what the perfect swing is, but you try hitting 125 balls at a driving range. That book's just this is how you hold a club. You try swinging a golf club and hitting it accurately 125 times down the middle of a fairway. Impossible. Makes it sound really easy in the book. And the trading course you've just done makes trading sound really easy, doesn't it? A mentor will speed up your learning curve. Yeah, that will definitely help as well. When I've listened to guys like David Paul and Mark Douglas, they seem to allude to the idea that they don't really use a stop loss. No, they don't. They didn't. Neither did Larry Williams. Neither does there's loads of people that don't. And do you know what? They're all successful. And this is the thing, you know, I've had so many people. There's the thing called the no stop loss gang that years and years and years ago when I was on Forex Factory, every time a new thread came up that was talking about anything that didn't use a stop loss, there was this gang of people that would go, "You're an idiot, blah, 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 that's not how you do risk reward." And all these people they're hovering around forums trying to learn the craft, and everybody that comes along that's got something new, they kill them. We used to call them the no stop loss gang because it was a group of people. It was always the same people that would flame anybody that came on and said, "Don't use a stop loss." And they go, "What if it moves up by this amount of money, blah, 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 you're all going to get killed, you're going to blow your accounts, blah, 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 blah." They're idiots. They just won't listen. You can't get a blown account on a 0.01 entry. Yeah, 5% entry, you'll blow it. 100% guaranteed, but they don't listen to why the stop loss is not being used. It's a case of David Paul, Mark Douglas, Larry Williams went long on the daily chart. What's the worst thing that can happen in a day? Not a lot. So if you get in with a 1% risk there and you say, if it moves 3 days against me, I'm going to lose 1% of my account, and don't use a stop loss. If that thing spikes like that for 3 days and then pops up, everybody's stopped out. You're sitting there going, that was an easy trade, wasn't it? Because you didn't put an order in the market to kill yourself. These guys were successful because they did exactly what the banks do. They wait for price to move. You don't know which way it's going. They didn't know which way it's going. They had a system and strategy which gave them an edge where most of the time it went their way. They exited their positions after price had hit a level they thought that looks like it's failing. But at the end of the day, so a daily strategy like they used to trade, or you can do this on any time frame, but if you get into a trade and you say, I'm going long today, if this moves down to here today and then spikes back up to there today, you're dead with a stop there or there. They went long here and they're in a little bit of drawdown. They'll wait until tomorrow and see what happens, and it might move down to there tomorrow and they'll go, I'm in drawdown still. If it closes below that level tomorrow, I'll get out. And then it spikes down and it pops up and puts in a positive day, and they go, I'm in less drawdown than I was when I got in. And then it goes like that and they go, excellent. Okay, I'll break even that because it hasn't really gone the way I wanted to. So the worst thing that can happen now is I lose no money. And then it either goes like that and they go, oh, well, and I'll trade the next trade, or it goes up and they go, excellent. And they bank some money. It's that simple. Patrick, as you've just said, when flash crashes occur, show me one. You're going to go to the US dollar Swiss. Yes, that's the one I've experienced in my 15 years of trading as well. That is the one flash crash I've seen. There's only been one. Yeah? Flash crashes, or black swans as they're known, don't happen very often. Yeah? Look at the US dollar yen intervention. What did I tell you was coming for the last 2 months? I've told you there's a huge 400 ADR move. I had it. Go and look at the... Actually, I don't know. I've not seen you in here before, but go and look at Wednesday's stream. Yeah, Tuesday's stream. I had a block drawn on the chart here, yeah, which stopped there. I told you that there's a 400 ADR move coming very soon. Yeah. Boing. What happened? Okay. So if you went long on the yen there that day, it moved all the way down there and came all the way back up there. What are you in on the next day? Drawdown. You're in 1.5 ADR of drawdown. Are you still alive? Yes. Pandemics. Look at pandemics. have to go out to the daily chart to see the pandemics. But, you know, pandemics happen. Yeah. But look at the speed the pandemics happen, right? Holy crap. Holy crap. That trade didn't work out. We take our loss. Holy crap. We're not holding forever, going, I hope it comes back. We have a level, we exit the positions. We just don't use an order to exit the positions every time the market moves up and down. That's the difference between the guys that made the money and the guys that didn't make the money. And that Swiss franc, yes, you'll be blown on that Swiss franc move. Funnily enough, 90% of brokers went bankrupt. Banks went bankrupt. What chance do you think retail traders have got? Even if you used a stop loss, you blew your account because there was no way of getting that stop loss triggered on the Euro Swiss peg removal. I was there. I was trading it. Nobody survived it. Nobody survived that. ADR was 132 pips. That move was 18,000 pips. Nobody survived that. My broker went bankrupt. That's happened once back in 2015. You don't need to worry about it. If there's a big down day, which is 4 ADR, that's your signal to get out. How often do you see a 4 ADR day? We've had one 4 ADR day this year, and it happened on Tuesday. Yeah. But we knew it was coming. Well, if you came in to hear, you knew it was coming because I've been telling you it was coming for weeks. But, you know, you can prepare for these things. I'm sure. Why am I sure? Because I knew it was coming. Yeah, see, and these guys that we're talking about, yeah, you know, Larry Williams, David Paul, Mark Douglas, they would have known this was coming as well because they're intelligent people. They keep an eye on why this thing moves. It's not about looking at candlestick patterns and understanding there's a bearish engulfing, therefore I need to go short. Why is that bearish engulfing there? Because the banks and institutions have more sell orders on side at the moment than they do buys. That's the key. Why? Not what? Yeah. Why is the candlestick like that? You need to understand how this thing moves, why it moves, what makes it move. Why are we sitting here at the moment having a crap day? Why am I waffling on? Because we're waiting for this afternoon when the market's going to move. Why do we know it's going to be quiet this morning? Because no banking institution in their right mind is going to put a load of money into any currency until they know which way the US dollar is going. When's it going to move? 1:30 this afternoon. On the dot, it's going to go mental. Everything. How do I know that? Because I've seen it 1,000 times. The people sitting there at the moment, not here, but people sitting there at the moment that are news traders are getting ready to put their bracket orders on top because it's the first news trade they've had on non-farm payroll. What they're going to experience this afternoon is slippage beyond anything they've ever experienced and a stop loss 5 times more than they wanted. Because that's what happens in news. We know that because I've seen it 1,000 times. They don't. They're going to learn that news trading doesn't work. These are just lessons you need to learn. But the books will teach you all of this. Till you've done it and lost all the money, you'll go, yep, that book's right. I'm keeping that one. You've got to do it. You've got to experience it. You've got to see it. Only way you learn. If you're a pilot, you've got to fly a plane. If you're a surgeon, you've got to cut open a pig to understand how the skin folds and all this. There's so much learning. This isn't a job you can just go Lamborghini in an hour. It just doesn't happen that way, does it? We know that. But yeah, all good fun, isn't it? Learning. Anyway, I was going, wasn't I? I now started waffling again. Pound US dollar bottom reached. Well, we'll find out this afternoon. I certainly hope so, yeah. Negative US this afternoon. Positive US. And that will be my signal to jump ship. But we'll see. Yeah, so hopefully we've hit the bottom on this. We've still got no strength on the pound, though, at the moment, which is holding this back. But fingers crossed for this afternoon. Traders that have been with you are super lucky. You know what the chart is telling you. Yeah, screen time. That's all it is, screen time. I'm not any more clever or any more... I'm not a better trader than anybody. I'm not more intelligent than anybody. I've just got experience. That's it. It's just having been there and done everything. Yeah, this is why old wise men with beards are consulted about stuff, because they're old, they're wise, they've seen it, they've done it. And if you go up to them and you don't know what's going to happen, and they've seen it happen 5 times, they'll tell you what's happened. So you go, oh, right, excellent. And then when it happens, you go, yes. And you become a wiser bearded man. I've been around a long time, that's all. Nothing more clever than that. Ideally, with my back testing, I like to be able to place the EA on, let it take trades, and then modify it and exit the trades myself, like we do live. Is there some software that allows you to do that? Yeah. So if you go to FX Blue and you go to apps and you go to FX Blue Trading Simulator, this, you can't see that screenshot. This is a trading simulator. No, right. So what you want to do, you can't do. No. This will allow you to take manual trades in the simulator, but you can't run another EA with it. It is an EA. But it allows you to press buys and sells and adjust your stops and do everything that you would do normal, but in super speed, obviously, in the simulator. So you can place trades live at the hard right edge and have it unfold on the hourly chart in minutes. What you can do is you can load onto the tester template as many indicators as you like. So you could have the market reversal alerts indicator running on it. You could have the ADR indicator running out on it. Support resistance propulsion doesn't work very well in the strategy tester, unfortunately. Just the way it calculates, it doesn't really work well. But you can load any indicators you want into there. So you'd have to manually take trades as if the market reversal alerts EA was on there. Yeah. Good bit of kit. FX Blue Trading Simulator. Very, very good. Like from what I've just said, if you don't want to just watch charts fly past, but you actually want to pretend you were there and then, that's the bit of kit. That's free. There's a paid version by another company. Can't remember the name of them. I don't think I put them on here, did I? No. Can't remember the name of the other company that does a simulator. There's a couple actually, but that one's free. Well worth it. How are you protecting your account against black swans? I just said that, haven't I? Patrick, if you've not understood ADR, go and watch the video on the website. That explains how that's this exact part it's at now. This is the maths behind ADR. The spreadsheet calculations I've done, all the data I've downloaded over 15 years, all that sort of stuff. It's all in there to do with ADR. It is quite complicated. At the end of the day, just trust me. This calculates it properly. You don't need to worry about it. Unless you really want to. The other thing to bear in mind is we have DD controls. Yeah. Yeah, if you're using the market reversal alerts EA, basically it will scale out the position as fast as it possibly can for you very, very quickly. But at the end of the day, you won't get filled on the orders properly. In a flash crash or any kind of black swan event, yeah. So look at the US dollar yen as an example. This is not a black swan. This is an intervention. It's a big move, right? But it's not that move, right? So if you find it on the 5 minute, right? Yeah. ADR is 92. That was 284. Yeah, so it's 250% of its average daily range executed in not 5 minutes, 1 minute. Yeah, look at the size of that candle. If you saw a candle that size on a 1 minute chart, you'd be like, what the hell was that? Imagine what everybody on the 1 minute chart thought when that thing went in. But look at it. It happened in 1 minute. If you had an order there, you did not get executed on that order. That moved so fast, literally every single buy order in the market, in all the dark pools, in all the bank market maker desks, every order in every broker within seconds was gone. If you said, I want to go long there, they went, no problem, we'll... There, sorry, that was where we got you filled. If you're using a stop loss, right, which is a quarter of an ADR, you got filled at 1 1/4 ADR. Your quarter ADR stop loss suddenly become 1.5 ADR stop loss. Yeah, that's 5 times more. If you were risking 1% on that long, you suddenly made a 5% loss. Yeah, this is the danger of slippage. But with moves like this, virtually all the time, you get a pullback on them. Every news event, non-farm payroll goes like that. And what does it do next? Does that. And then what does everybody do? Try and fade it. And then they go, ha ha, and they go the other way. Or they don't, and they go like that. This is what the banks play with you. This is what they do at non-farm. They're executing orders. They don't give a monkeys about anything. What their job is I've got $25 million to convert into pounds. Wait for non-farm payroll because every idiot is going to put their money in the market. We can execute the whole lot in one batch. That's basically what the banks are saying. They couldn't give a crap which way you're going. They couldn't give a crap which way they're going. They just want the orders executed because they need to go to the pub Friday afternoon. Yeah. How you doing, Bob? Oh, still got 26 million to get rid of. Oh, I just wait for 130. Yeah, all right. Pub? Yeah. That's what happens in banks. Literally. Friday afternoon. They're not interested. They're just wanting the orders out of the way. Done. If you've watched the, I'm so crap with remembering stuff. There's a TV series about UK banking, and the girl, it revolves around a girl. She goes in as an apprentice. Someone's going to say the name of it in a minute. And she trades through non-farm payroll in one of the episodes. And she bites her tongue so bad she bleeds everywhere because she's watching her position go 10 grand, 15, 25, 30. Getting worse and worse and worse and worse and worse. But that's what happens in banks. And basically, there's somebody on the phone going, you're 50K down, shut it. Yeah. And that's what they do. They go, didn't work. Close it. But they don't use a stop loss. They just close the order. Soft for FX, Marco has just said, that's the one I was talking about. So FX Blue, and it's soft for FX. That's the other simulator, which is pretty good for MT4. There is another one as well. There's a few. Right. I'm going to go now. Google ADR or YouTube ADR, or just watch what's on my website, because whatever you want. I haven't asked since my Forex funds fiasco, which prop firm challenges do you trust? None. I'm not trading prop at the moment. I'm trading my own capital. I don't trust a prop firm, any of them, none of them at the minute. Their business model is the same as my Forex funds. There's none that can prove any different. So therefore, you look at the turnover, you look at the accounts of all the prop firms, which are obviously published. They all have either zero bank balances or huge bank balances. If they have huge bank balances, it means they're not segregating funds. If they have zero bank balances, it means that there's a shell company for the prop firm that is front facing. There's none that I'm aware of. There's a few that are proper prop firms. They've been around for a long time, but they do not run the same models as all these other prop firms are. They're running proper models where they ask you to sit there and trade for 3 to 6 months, and they want you to pay them an amount of money. And it's not $500. It's a few grand for the privilege of potentially auditioning for them, properly auditioning. Yeah. So I'm not trading any prop until my Forex funds' results are out. because a lot of these are going to go pop. The takings are massively down. Yeah. My Forex funds was making $21 million a month out of evaluation fees. Yeah. Some of the other no other prop firm was close, but other prop firms like E8 and that, they're way down. Their evaluations are way down. The Discord channels have all gone very, very quiet compared to what they were before. It's all, everyone's like, oh, really? Was it really binary options again? I don't know. We'll find out. But until we find out, I'm not doing anything. Everything's speculative at the moment. Nobody knows anything for sure. So until we have it, that's why I was doing that Funder Pro. Because Funder Pro, they actually fund you, as a lot of them maybe have. They have a separate, they don't have a separate brokerage. Yeah, they are their own brokerage. So, you know, it's the same business model. This is why I wanted to check them out. Their business model is the same as my Forex funds. The guy at the top that owns the prop firm also owns the brokerage. So what does he have? 100% control over price and your funds. One person with 100% of control can do absolutely anything they like. Until they can prove otherwise, they're all in the same business. Wait. Did I lose any money with my Forex funds? Yes, they owe me. So I'm waiting for the solicitors, the court actions to start. Court actions won't be able to start until the CFTC findings are completed. And then the solicitors will have a field day. They'll be after him for every penny that everybody has ever spent. Literally every evaluation you have ever done with my Forex funds, if he's found guilty by the CFTC, it's a fraud. Therefore, every penny you've put into prop, you can go back and get it plus interest. So the solicitors will all be going, as soon as that comes out, they'll be going, here we go. And anybody out there ever traded with my Forex funds? Yes. How many? Okay, let's go through your emails. How many evaluations did you take? What was the cost of those evaluations? Show your bank statements. Let's have a look at everything. There you go. There's everything. What have you paid them? X. Okay, we'll get you back X plus Y. That's what's happening if he's found guilty. If he's not, fine. But, you know, the Fed are involved, so probably. Yeah, we'll see. But, you know, and this is something, if you put more money into prop now, what you're doing, you're just teeing yourself up for the next court case. And they owe me money. They don't just owe me money from trading. They owe me money from affiliate revenue as well. It's only a couple of $100 over a period of a quarter. You know, I don't earn money. I'm not an affiliate. I have affiliate accounts, but I don't, you know, it's a meal out every couple of months type money. But I'm owed that as well. You know, so there's a lot of people owed a lot of money. Some of the big affiliates for my Forex funds will be owing tens of thousands of money in affiliate revenue as well. Yeah, all that is on the cards, isn't it? So we'll see. But until those findings are out, I'm not interested. Use your own capital. If you want to use your own capital with higher risk, yeah, I mean, that's another option. If you've, you know, not many people with 100 grand lying around. If you want to trade a 100 grand account. So if you've got 20 grand lying around, brilliant. But use a slightly higher risk per trade because, you know, drawdown will be higher when losing runs, but you'll be able to make some decent money doing it that way. But, you know, if you think every $200, $300, $500 you've put into prop over the years, it's a lot. It could all be coming back. So I'm not willing to really reinvest until I know that a company is safe, and no one can convince me. I've asked the question in support, can you prove that you are trading real funds? They send me to the FAQ and I say, no, I know what your FAQ says. Can you prove to me that you are copying any trader's accounts into a segregated fund account on real markets? We're not willing to divulge that information. It's inside the company sort of thing. It's like, well, then you're not, are you? Because if you were, you'd be shouting and screaming about it. Because if the current industry as it is had one firm that could prove that they were segregating accounts and every trade you took was actually copied into live funded accounts, everybody would flock there. It would be the easiest marketing scam not scam, the easiest marketing plan in the world, wouldn't it? Well, let's just show everybody we are real. If they've got that much worry about it, I'll go there. Why is no one doing it? You got to be on the side of caution. If it's too good to be true, it's too good to be true. And if you can prove to be otherwise, I'm not interested. But that's me, and that's what my thoughts are on it. But you know, a lot of people are still trading prop. I know they are, because they're getting in touch with me saying, have you got a good set file for the ORB for prop? Yes, pick any one you like. Which day you're starting it? I've no idea if it'll pass or fail. It depends what the market does. But I know people are still trading it because it's still getting in touch with me saying, this is what I'm using it for. So we'll see. Patrick, you have so many tutorials and videos currently watching the bootcamp. Yeah, cool. If you want to go through it in order, Patrick, that position trading handbook on the website is what you need. This tells you which order to watch everything in. Just gives you all the links to all the content, but in an order that will make logical sense. Industry, the name of Industry, that's it, Max. Industry is the name of the series about the woman in the bank that bites her tongue off trading NFP. I'll probably get a copyright hit for this. Oh. There it is. Dramatic music plays. Instinctive chatter. So she's basically got a big position on the US dollar, and non-farm's coming out in a minute. So they're just waiting for the non-farm print to come out. Unemployment rate, there you go. See, now that, what do I keep saying in here, right? People call it non-farm payroll day. It's not non-farm payroll day. This is what is moving the market. That is irrelevant. Who gives a monkeys what the payroll's like for people that don't work in farms? No one. The unemployment rate in the country is important. Yeah, that's what the banks and institutions are looking at. Unemployment rate. This is non-farm payroll day. That's not what they're interested in. Phone rings softly. Five seconds to non-farm. 1:30. Got to watch this if you haven't. It's a brilliant series. Shows you how this thing works, the banks. Non-farm payrolls, 250. Was it down or up? Didn't see. So basically, she gets her position into profit because NFP's gone her way. Look. Yeah, this is what I was just saying about the banks. Moving it down, moving it down, moving it down. She's going, yes. Well, in this case, they're moving it up, moving it up, moving it up. She's into profit. What doesn't she do? Close the position. Probably don't want to watch this bit in a minute. It's not nice. But anyway. Anyway, you probably know what's coming. Big miss. 140. That's how quick it turns in non-farm. It's that spike. Yeah, we get the move and the banks go, excellent. We pull it back and then everyone goes, oh, short it. Nah, nah. And they go the other way. They don't care. They really couldn't give a monkeys what you're doing. And this is banks. Banks don't give a monkeys. Ow, there goes the bite. Makes me scream every time. Really good. Watch it if you haven't seen it. Very good. Are you still trading? Yeah, always trading. Positions are always open. Not trading the indices anymore because the indices are done. I'm out, done on the indices. Regrettably, I don't think clients will get their money back. Sounds like a shit show. Yeah, well, clients won't get their money back from my Forex funds necessarily, but all of their funds are frozen. So he took 300 million, it's estimated, or something like that, in evaluation fees. Whatever's left in the bank account is left in the bank account. So basically, when you have the money grab, they'll be after him. I don't know how compensation and all that sort of stuff would work. It's highly unlikely everyone will get all their money back. But if you get back a certain percent in the dollar, you get back whatever you get, don't you? It's not like when brokers went bust. When Alpari went bust on me on the Swiss national, the Swiss peg removal, the funds were obviously segregated. So although Alpari, as a broker, Alpari UK went bust, I couldn't access my money. My money was segregated. This is why brokers have segregated accounts, which is why prop should have segregated accounts to fund you with, but they don't. So yeah, basically, you just go through and get that money out. You just got to go through litigation because the company's gone bust, so you can't talk to them anymore. But with prop, different thing in it. You've basically been paying someone for a demo account. They've taken that money and gone, thank you very much. I've spent it on my Lamborghini and my second house. I can't give it back to you because I've got a Lamborghini and a second house. We'll sell it then. All right. So I sell it for half the price and I give you half back. He had 300 million. Where is it all? Who knows? That's what the solicitors will sort out if it is found that it's all a big, massive scam and he's guilty. But this is why we got to wait. Got to wait for the CFTC to figure it out. Thank you, Carly. Learning, always good. Thanks, Chief. See you in New York. XRUpdate.news. I will see you in New York. Yeah, so I'll go now and do other stuff. I've got manuals to write and coding to do. So I will be back this afternoon at 2:20. No, I won't. I'll be back this afternoon at 1:20 for non-farm payroll, aka unemployment rate. And then we'll see how we get on with that. At the moment, the US dollar seems to be weakening into it. So we'll see. But yeah, I'll be back on early today. Secured creditors will be played first. Yeah, I know. We'll wait and see. Yeah, so I'll be back this afternoon at 1:20. We'll have a look at what's going on with non-farm. I won't be trading it because I'm in positions, so I'm trading it as in positions, but I'm not going to actually physically try and make money on the news event. But we'll see how that goes. Other than that, I'll be in Telegram if you need me. And back Monday morning for the Frankfurt session at 7:50 at the same time, and normally 2:20 for New York. But today, 1:20, and I'll post that in Telegram in a minute. All right. Have a good one. Anything you need, let me know. Otherwise, I'll see you guys in the next one.